Imagine losing 90% of your trading account, losing over half of your money on one trade, and crippling your dream to trade for a living and to quit the job you hate. Imagine how you would feel if you lost your hard-earned savings in the blink of an eye and had to face your friends and family. Hi, I'm Dave Gagne, and that was me just a few years ago. Even after all that, I didn't give up, and I discovered the real secret to trading success. 6 months later, I more than doubled my account, and now I consistently beat the markets, and I want to show you how to do it too. In the next 6 minutes, I'm also going to show you the 3 key components of any trading system or trading plan, why you're losing money right now, and the 3 key money management concepts you should be using that will save you from huge losses, taking on too much risk, and stopping you from the profits you deserve. I'm going to show you all this and more. You don't have to take notes, just listen, because I really want you to let this sink in. Let's get started. The 3 key areas of a trading plan that you need are your system, your money management, and your trading psychology. All 3 are important. If you're missing one, you're always going to struggle and be one step behind the traders that have all 3. The system is the nitty-gritty details of how you will trade. It includes tracking and statistics, such as your winning percentage, your average win, and your average loss, your reward to risk ratios, and all the tactical strategies and buy and sell setups you will be using. Your money management includes all the trading rules and guidelines you're going to follow. This includes your entry, your stop loss, your profit targets, position sizing, maximum risk, and deciding how you will exit a trade. The last and most important part of your plan includes investor psychology, which is how you will exploit the weaknesses of other traders. Your discipline and your own trading psychology, which includes mastering your own greed and fear in a trade. Trading psychology is your biggest challenge, and it is the biggest component of your overall trading plan. Having the best system and money management rules mean nothing if you don't have the discipline to follow it, and if you're constantly shooting yourself in the foot psychologically. So why are you losing money right now? I believe the single biggest reason you're losing in the markets isn't because you can't predict prices, or you can't pick the right stocks to trade, or that you're always on the wrong side of the market. Those are all great reasons why you're losing, but they're only part of it. The single biggest reason why you're losing is because you're not using a detailed plan before you enter your trades. You need to know ahead of time when you're going to enter and how you will exit a trade. You need to know how you're going to manage that trade and what you will do if things go against you. I'm talking more than just having a stop loss. A stop loss is a given. You need to have contingencies for gaps and other events that will affect your trade. And here's the biggie. You need to have rules and guidelines to manage risk. Without these steps, you're flying blind and every losing trade is going to create emotion, and before you know it, you're trading out of control and taking huge hits in your trading account. In my opinion, the top 3 money management principles are risk management, position sizing, and knowing when to exit. Notice I didn't say stop loss. It goes without saying that you should be using a stop loss, and it is part of risk management. But just having a stop loss does you no good if you're still taking too much risk. The biggest rule in risk management is protect your capital all the time. And that doesn't mean putting all your money in one trade and having a stop loss. It means thinking defensively when everyone else is thinking about their profits before they even enter a trade. It means you need to understand your reward versus your risk multiple before you even consider a trade. And finally, it means you only take the trades that meet your trading plan's strict entry criteria. This also ties into position sizing. The name of the game in trading is longevity. You need to develop a method that you can consistently repeat over and over again. You can't do that if you blow your portfolio out with every losing trade. Hey, losing trades are a fact of life if you want to be a trader. The key is learning how to use proper position sizing so that a losing trade is like a tap on the wrist and not a sledgehammer to the head. If you start doing this properly and combine the reward and risk concept from earlier, you can afford to lose more than you win, and that's the real secret. Top traders don't have high winning percentages. Now, I'm not going to lie to you. Winning 3 out of 4 times is great, really great. But it's not the secret sauce to success in the markets. Those guys are killing it because they're using a few tactics consistently, and they have mastered the concepts of risk management and position sizing. The last principle I mentioned is knowing when to exit a trade. This idea is usually glossed over, just passed off as having a stop loss to get out. Again, a stop loss is part of it, but who wants to lose money all the time? One of the biggest problems I see with traders is when they're in a winning trade, the greed takes over and they never exit with their profits. It's hard to take money off the table when things are working, and you do want to let your winners run. But it's important to lock in those gains with either a trailing stop or some sort of profit target. When you're learning how to trade, there's no shame in taking some money off the table when your emotions start getting away from you. Here's something to think about if you're concerned about lost profits. You can't go broke by taking your profits, especially if you're using the other two concepts I mentioned earlier. Those are the 3 biggest things that I think will dramatically improve your trading if you can understand and master them.